All right, guys and gals, back to work. Back to work. Hope you guys had a fantastic weekend. We got a couple more days left. Final couple of days of July. It's been a fantastic month so far. Let's finish up with some more green this week. Now, boy, markets are all chopped up, sideways, choppy ranges right now. We got big FOMC, we got big earnings, we got big non-farm payrolls later in the week. So we got news later in the week. Choppy sideways markets right now. Put those two clues together. I'll bet fakeout breakouts are probably where the easy money is made until later on in the week here. Now, fakeout breakouts, I can see, I think, 4 easy ways to make some money on fakeout breakouts. We'll cover the entire roadmap that you guys have a game plan to make some money tomorrow as well. Now, before we jump in to my favorite trades for tomorrow, make sure you subscribe to our channel. You don't want to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button, will you? And give me a shout out, give me a heck yeah in the comment section below. Thank you guys so much for tuning in, supporting our channel. Enough of the intro, though. Let's go make some money. Last couple days, boy, this month has flown right by. So charts are all ready. Nasdaq triple Q charts are ready in front of me. The E-mini and the SPY is ready. I see 2 very obvious clues right now on these charts that are telling us where the easy money is waiting for us to make tomorrow morning. Now, one of those big clues is right here on these hourly charts, these 60-minute time frames. It's obvious to see here right now the 60-minute time frames right now are bearish overall on the S&P and SPY, bearish overall on the Nasdaq and the triple Qs. The bears have all the control right now, at least for now, of all the short-term momentum. But you know what these hourly charts don't do? I like to use these for bigger picture, but you know what? These are not going to help us time the best entries, right? It's good to know what the direction is, but timing the entries, you know, I have one more important clue on some faster time frames, some tick charts that will help us unlock the best entry time, because obviously you make your money with time the best entries. And before we jump in though and talk about those tick charts here and time the entry for tomorrow, let's look at our schedule for tomorrow, because we have quite the busy days or the busy weeks ahead of us here. First things first here for tomorrow, we're going to the end of the month, right? The end of the month is always expected to be more volatile. So uptick in volatility expected tomorrow and Wednesday. Also, to be aware too, there's an AI conference going on right now. We're going to hear from NVIDIA, we'll hear from Meta. The big players in AI are speaking, I believe, as we speak right now. It's tough to tell how much that will affect us overnight, but definitely something I'm tracking here overnight, the AI conference with NVIDIA and Meta speaking right now. Tomorrow morning, the JOLTS report tomorrow morning, 10 o'clock Eastern time. On top of that, consumer confidence number. That's definitely something I'm tracking for tomorrow. And of course, final thing, the 4th thing on my radar for tomorrow is we got earnings tomorrow night. Big earnings. You may have heard these names before. AMD and Microsoft. Now, they're reporting tomorrow night after the close, so probably won't impact us too much tomorrow during our morning trading session, but tomorrow night we'll come back and talk about a trade, the reaction to AMD and Microsoft. And of course, we got Meta, we got Amazon, Apple. There's a huge amount of earnings later on in the week here, so this will be the first of many important videos here this week. So again, end of month volatility, the next 2 days here. The big news tomorrow we know about is the confidence and JOLTS report. Pay attention on that. And again, tomorrow night we'll talk more about the earnings reports coming out tomorrow night after the close and get ready for what should be a pretty busy day on Wednesday. So that's the schedule for tomorrow. Keep those on your radar. Let's get back to our charts though, because it's good to know when the news is out tomorrow, that 10 o'clock news, that JOLTS report. But the money is made on the charts. We don't trade news, we trade chart patterns in our trade room. And I'll tell you, a time chart like this is not going to help us time the entries tomorrow morning in trade room. Let's go over tick charts here right now. Now, tick charts make pattern recognition a whole lot easier. This is a 7,000 tick chart. If you're watching here for the first time, all the time frames in the upper left-hand corner. And by the way, that indicator right there, the only indicator I use is the 21 EMA. Learn to use the 21 EMA. It will unlock a ton of easy money-making opportunities every morning in our trade room. Now, there's one really big clue here on this chart right now. It is a bull market up into a trading range. Now, ranges act like magnets, and they like to rotate back and forth, right? Back and forth. So, as I said earlier, fake out breakouts or failed breakouts, in other words, buying off that low, selling off that high, and waiting for breakout pullbacks. Now, we're an overall bear market. So looking for fake out breakouts off the high is definitely something I have on my radar. We'll talk about 4 different ways to short that fake out breakout because we're overall bearish on the 60-minute. I'll also talk about how you know when a breakout can be bought, right? How do you know when to sell a breakout or when to trade a breakout pullback? We'll talk about that as we go deeper into the video here right now. But I'll tell you though, in a bull move like this into a trading range, there's oftentimes quite a bit of money to make underneath that trading range. I have 3 different fake out breakouts below the range because remember, we get that big move down last week, right? It's not going to be easy to attract in sellers under here. Very easy to short above that high. I like some shorts off the high. We'll cover that here in a moment. But if we can go lower right now, if we can go lower, this would be a horrible spot to be a seller, right? Because you're right around that big low from last week. That range above us is a magnet, bullish there into a trading range. The hard part is I can't go picking that bottom, right? Overall bearish. I'm not going to kind of pick that bottom. What I'll do is I want to look for one specific entry pattern. Whenever I'm going against that 60-minute direction we saw earlier, I want to buy off the low. I'm going to use what is ultimately a bear trap pattern. I call them crown reversals. It's very simple. Let's trap the bears in down here. Let them try once. Go higher, let them try twice. Now look at the pattern here. It's a higher high in price, a move right below that low. This is a technical bear trap pattern we teach in our free video classes. I call these crown reversals because they're kind of a reversal off of that low. Again, crown reversal or a bear trap going back up into that trading range. Now, very important, remember that ranges, they love to rotate. So the amount below that range will want to rotate back higher again. That is then when we look for our profit targets. Now watch closely here because as we get that run lower, if I can get those bears trapped in, again, higher high in price, a trap right below that low. A very simple pattern you guys are learning in the free video course. During that rotation going higher, I can look to add to the position with more bear trap patterns. Now, as we go higher, it's very simple. Look for a separation off the moving average. I want a higher high in price and move right below that low. So one easy way to make money on a fake out breakout is to let the market break down, trap some rookies in, let them try once, let them try twice, use that bear trap pattern we talk about so much in the free video course. We know where the market now wants to go, right? It wants to take out that pendulum swing. While it's making its way up there, we look for more bear trap patterns. This one separates off the moving average, a higher high in price, and a move right below that low. That is the key to buying bear traps in that overall bearish environment on the 60-minute time frame. So now let's think about one variation of this, right? Because I mentioned earlier, there are 3 ways to trade this. This is just one of them. We oftentimes will get a rundown, a nice easy 1 try, 2 try, right? Higher high, bear trap low. We oftentimes get those easy bear traps. But again, we're so bearish overall. The bears come in, they hold the underbelly of that range, and they run back down and try to do it again. Now, here's the way I think about this. Again, that range overhead is still a magnet. This move back down is not an official breakout. We'll talk about how you know what a breakout looks like in a few moments here. Don't you worry. However, anybody who sells right there, they're taking their profit where? Down around that low. The way I look at this is the sellers up here become buyers down here. This is a horrible spot to now be selling. Again, you're right into those major lows, that range above us, right? Okay, so not a good spot to be selling. Now what I'll do is look for a failure pattern. Now, failures are a little more aggressive than a crown reversal pattern. It's simple. I still want bears trying once. I still want bears trying twice, but now because this is a double bottom, because they're retesting that low, I now know again, all those rookie bears, their stops are right here. I can buy into those stops. Now you'll notice on a bear trap pattern, I need to get underneath that prior swing. On a regular failure pattern, I don't need that trap. I wouldn't argue about it. I wouldn't complain about a bear trap low, but it's not 100% necessary. Now those failure patterns, they love to run up here. Now they love to run up. They love to separate off the 21 EMA, get that higher high in price. And again, think about that same continuation pattern mentioned earlier. That is that, again, classic kind of technical bear trap going back up into that trading range. Range above us, bullish move, a lot of support below us. It's a bear trap entry or a crown reversal entry. You'll learn this in the free video course. If they roll this thing back over again and double bottom again, remember, horrible spot to be selling, great place to trap in some rookies. We assume those rookies right there. Trap the rookies in once, twice, buy into their stop losses. And as the market runs and goes higher, because again, it's going to want to rotate to the other side of that trading range. As it rotates higher, look for that separation of the moving average, that higher high in price, and that move right below that low. It's that nice strong green candle closing above that 21 EMA, right? That is one of my favorite ways to trade a fake out breakup below that trading range. Now, let's slow down for a second because I know that most of you guys and gals watching right now, you guys know these patterns. You're making money on traps, but if you're here for the first time right now, this might be a brand new strategy for you. It might be way over your head. Don't you worry though. I teach the entire strategy. I have hundreds of examples of crown reversals, failures, trap combinations. I teach the entire thing in so much more detail in our free video classes. I'll put a link up top for you. Don't you worry. Upper right hand corner, grab that link that popped up there and take that free trading course because the strategy I teach in that short video series will teach you a remarkably simple trick we use in our members trade room so we always know where to find the best winning trades each day. More importantly though, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns, traps, failures, strength trades, pullback combinations. You'll learn the entire roadmap, and I have hundreds of examples all wrapped up in that free video course. Guys, the markets are way too good right now not to be making consistent money. If you're missing the best trades each day, if you're struggling to qualify for a funded account at Apex or Top Step, hit the link up top there. Take that free course. It is perfect for anyone who is serious about making money in these markets. And also be aware too, if you can't get the link up top there, I'll put all the important links, the description of the YouTube video, the free class links will be down there. Don't forget, we trade together every day in our trade room, 8 o'clock Eastern time. I'll put trade room membership links down there for too. And also too, don't forget too, I post a lot of updates on Twitter or X throughout the day. If you're on X or Twitter, give me a follow. All the details again in the description of that YouTube video. But start first tonight though with that free video course. Learn the roadmap, learn the strategy. For most folks, it's enough to get them started making money on their own. Give you a good roadmap to follow there in that free video course. So I want to buy that fake out breakout going lower. In a moment, we'll talk about if we go higher here, because again, I see some great shorts off the top there and possibly some breakout pullbacks. We'll cover that in just one more moment. Before we do that though, again, I want to run lower, trap the bears in, use those failures, use those bear trap patterns and squeeze those bear stops and run back up into that trading range. But you know what? Sometimes I don't get that entry signal. Sometimes we get V bottoms. V bottoms are very common in summertime markets. V bottoms are easy if you have the right strategy. For example, if we run lower and there's so many buyers down there, it just whoop and goes right back up into that trading range. Most of the time, this begins to pop up and most of the time it begins to grind going higher. That grinding motion will separate off the moving average like this, and that is a very, very easy giveaway to find the next entry. So again, V bottom off that low, it kind of whoop right back up again and starts grinding above that 21 EMA. Watch closely, market trend line off the highs, bring that trend line down at those lows, that creates your channel. What happens in these situations is the market grinds higher because sellers in this case are getting stopped out and exiting for a loss. Eventually buyers will want to come back in and they're going to want to buy nice and low. To do that, I look left, I find some prior swings, and I basically look for any of the entry paths I teach in the free video course. I look for the first test off that channel. Right? In the video class, we talk about this to be the first test is the best test. The first test off the low of that new bull channel. Now, of course, this could be a bear trap. Like we're showing you here, a lot of times we don't get bear traps. We get failure patterns below the 21 EMA, right? Bears come in, they try to shorten that 21 EMA. Range above us is the magnet. We use failures into pullback combinations. Again, this will make a lot more sense once you guys get into that free video course I mentioned linked up before. So again, a V bottom reversal, not my favorite entry because again, I'd like to get this thing going lower, trap the bears in and squeeze back up again. But if for some reason all we get is that V bottom off that low, the hardest part is don't chase it as it goes higher. In most cases, your patience is rewarded. Mark that trend line, find that channel, and don't miss that first test. Bear trap, failure, pullback combo. And again, remember the amount below the range, the amount above the range, that will give us an idea now of where to leave that runner. Because if you want to make more money, get better at holding on to your trades for longer periods, and ranges make it very easy to know where that market wants to go as it rotates to the side of that trading range. Perfect. So now we know how to buy this thing underneath that trading range. Now let's get serious about going higher here, because there are some easy ways to short this thing off the top. And also too, how do we know if this thing goes higher here, at what point do I know I can now safely start buying breakout pullbacks? Because breakout pullbacks are very, very common in a range breakout, but this one easy giveaway that tells you when to buy the breakout pullback or when to sell the fake out breakout. How about some Nasdaq right now? Nasdaq 60-minute time frame. Of course, the Nasdaq and the S&P are always usually very, very similar here. We're bearish overall right now on the NQ. You can easily see that. That will give us the overall directional bias, right, for the rest of the week here until something changes. Now, tick charts, again, this is a 4,000 tick chart, heads up, a little bit different than the 7,000 tick chart we saw earlier on the S&P chart. And again, that is the 21 EMA, same as always. There is your bull market right there into your trading range. I mentioned earlier that ranges are magnets, and they love to rotate, right? The amount below the range, the amount above the range. We want to ultimately trade these fake out breakouts, right? Trade that rotation. Buy low with bear traps, sell high with bull traps. And again, because we have this bullish move into a trading range, we may be in store here for a breakout pullback. But this one very simple chart pattern always tells us when to buy a breakout pullback or when to sell a breakout pullback. And we'll talk about that more, of course, we'll go deeper here into this lesson. So if we understand that ranges like to rotate, right? If we understand that the amount below the range, the amount above the range, we know where the market wants to get to during that rotation. You know, last week, we talked about this earlier last week here, we said failures at the edges and traps as it rotates, right? That's always kind of the name of the game when it comes to trading ranges. We look for breakouts, we look for failures at the edges, and then as it rotates, we look for traps, right? So what's trap up here? As we go higher, during that range rotation going higher, I want to buy as low as I possibly can. And the easiest way that I'm going to do that is look for a bear trap. Now, bear traps are very simple. Make sure as we go higher, I want to see separation off the 21 EMA, a shallow pullback, a higher high in price. When I say separation, what that means is it doesn't pull back overall, right? Like over here, right? Pulls back deep, right? It won't pull back very deep. It'll barely pull back, if at all, and touch that 21 EMA. As we're rotating higher and trying to take out that pendulum swing, we call this, on the side of that trading range, I want to see that higher high in price. I want to see that shallow pullback that barely touches, if not doesn't touches, right, that moving average. Get underneath that low, a strong green candle closing above the moving average. Again, a lot of examples of these inside the free video course. That is a bear trap pattern on the way higher. That is how we're looking to buy this thing as it rotates, if it rotates, going higher. Now, once we get up around these highs now, it's important to remember this is a bear market overall on the 60-minute, the higher time frame. We have to expect up in these areas, there are going to be a lot of sellers waiting up here to crush this thing back down into that trading range. The problem is that I can't simply step in front of that freight train, right? I'm not going to blindly sell that level. What I would do though is, if I can get up into overhead resistance, if I start seeing these buyers come in and try once, try twice to keep going higher. Yeah, see, now we know where their stops are, right? Now we know where their stops are. Now we know where buyers become sellers, right? When buyers get stopped out, they become sellers on their way out, right? So if I can get these buyers in here buying right into overhead resistance, this is the last place you want to buy right now, right? It's a bear market in the 60-minute time frame. You do not want to buy right there. I'll talk about this one easy pattern here that will tell us if we can start buying it, but this is definitely not it, right? It's a failure pattern. It's buyers once. It's buyers twice. Run those stops. Now think about this again. It's that failure. Remember, failures at the edges, and then what's it always? Traps as it rotates. Failures at the edges, traps as it rotates, right? And again, it'll want to rotate the amount above, the amount below. That will give you an idea there for where that final target will be, and where, of course, at that point, now we can look at those bear traps, 1, 2, right, and back up we go. So same basic idea we talked about earlier on the S&P and the SPY can be applied the same thing here, the Nasdaq and the triple Qs. If we go higher though, it'll be a buyer failure pattern to short the top, right? And of course, a bull trap pattern again. Bull traps are going to be the opposite of a bear trap, right? It's a lower low in price. It's a separation off the moving average. There is your, again, a bull trap pattern. If we're lucky tomorrow, there'll be a channel here. Mark off that low, mark off that high. That is a gorgeous way to short this thing as it rotates back down again, right? Makes sense? And also keep in mind too, right? Sometimes these things run up. We get that easy bull trap, that easy buyer failure. We oftentimes get a winning trade out of these. But again, we're so bullish in the short term right now, we may find our way back up and retest the high again. Remember, a double top in an overall bear market we're seeing in the 60-minute time frame right now is not a breakout. It's not a bullish reversal. If it keeps going, and I'll talk about that in a moment here, then yes, maybe it is. But right now, though, until that 60-minute time frame turns bullish for us, we're going to assume up here right now there are more bears coming in here. So do it again. Do it again. Buyers once, buyers twice. Why twice? Because again, I want the stop loss. I want those stops. I want their pain to get hit right here. Again, it's a buyer failure pattern. We teach this stuff in our free video classes. There's your failure, and same thing. As we roll lower, look for that separation off the moving average. Lower low in price for a bull trap, above a prior high for a bull trap, basically opposite pattern as a bear trap pattern, and making our way back down again. Again, the amount above, the amount below, that gives you an idea of where that target is on the other side of that trading range. And again, buy that low now, use those bear trap patterns, right? Those fake out breakouts to buy it right back up again, right? Makes sense? And one last thing too, we again, I would imagine a lot of bears waiting up here. If we make our way higher here, if we just get crushed right back down again, remember, don't chase it going lower, right? If you don't get the buyer failure, the bull trap up there, if we can't get that bull trap for the short up top there, if it gets crushed back down again and begins to grind its way down, okay, we know how to trade this stuff. Look left, find that trend line at the low, right? Connect those lows like that. Bring it up top, pin at the highs like this, right? Up at the highs, look left now, find some prior swings, because as you guys will learn in the free video classes, prior swings are where traps live, and usually these are where the best money is made in these environments, right? It could be a bull trap like this. It could be a buyer failure pattern above the moving average, right? Failure into pullback combination. We call this the price action cycle. You'll learn all this stuff, of course, inside that free video course. So again, I love the idea of that bull trap short up top there, but if all we get is a V top and it grinds on down like that, you now know, don't chase after it, right? Draw that trend line, find that channel, get that first test, right? First test is always the best test off of those highs. And again, it could be a buyer failure, right? Anchor off those lows, up around that high, find those prior swings, get up, trap those buyers in, failure, pullback, combination, same stuff I'm mentioning here overall, right? These patterns repeat over and over and over again. All right, now, how do we know, right? How do we know now if the breakout is legit? Right? How do you know if we break out, if that breakout is legit? There are two types of breakout patterns to look for. One of them is very simple. If we pop up, take out resistance, pull back to the moving average, and jump, right? If we then jump off that moving average, I call these 1, 2, 3 breakout patterns. Now, again, remember, it's not enough to go up and then pull back, okay? Because this could easily get crushed back down again like did earlier on in the month this month, right? So we have to take out these highs, hold that pullback, and then really jump, right? Really give us a good follow through off that high. Lately, though, none of that has worked, right? Go up, pull back, and jump. Didn't work. Go up, pull back, and jump. Didn't work. Up, pull back, and jump, right? So again, just going higher here is not enough to call this a legit breakout. We'll still go 1 try, 2 try, back down there into that range. However, if they pull back that 21 EMA and the bulls can hold that pullback and jump, see, now we know this is officially now a bull breakout. Another breakout I look for is a pop and grind, right? Oftentimes what happens is it'll pop up and begin to grind away from that 21 EMA, right? Once it grinds away from it, that's another variation of a breakout signal. Now we know the market now has broken out and is kind of lift off right away from that range. Because again, ranges are magnets. Now, once I get my breakout, whether or not it be a breakout pullback that jumps up like that, right? Was that one? Or more common is kind of that pop up and that grind going higher. Once we see that pop and grind, now we look left, find those prior highs here. That becomes the entry point I'm looking at, and I wait for a 2-legged pullback. Now, a 2-legged pullback's easy. Get under the moving average, a bit more than a measured move, right? A bit more than a measured move. That will give us the general area for the pullback, right? Again, a 2-legged pullback. When I think of a breakout pullback, I think a bit more, again, a 2-legged pullback, a bit more than a measured move. Then all we do is we don't pick that bottom. We use that same failure pattern, right? That bears once, bears twice, trap those bears in, squeeze those stops. And again, as always, it's that failure into that trap combination. It's that separation of moving average, that higher high in price, that trap right below that low. And the cool thing about these kind of breakout patterns is the breakout leg, right? That strong breakout leg is used the measuring leg. I now pin it down at that low, bring it up at that high, and that will give us an idea of where to leave that final target, right? Half off at the top of that move, bit right final runner target right at the measured move going higher, right, guys? So once we get a breakout, the breakout leg is always the measuring leg. Once we know that, and we know the deepest part of that pullback, I can now go in and attach that right there and give us that final target. Remember, you want to make more money, hold your winning trades longer. Easy way to time the perfect entry. Again, breaks out, shows proof. We get that 2-legged pullback, a bit more than a measured move. We're now in that area of the breakout pullback zone right there. It looks great. We don't pick the bottom. We trap the bears in, use their stops to fuel the move going higher. That's a failure into a bear trap combo, and let that winner run to get that measured move going higher. All right, guys, that's the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us, guys. The markets are wild these days. We got big earnings this week, end of the month this week. The easiest way to start making money right now is come out and learn and trade along every morning in our trade room. I'm going to put all the important links tonight, description of the YouTube video. The free class links will be down there. Start first on the free video series first. Get your feet wet, learn the fundamentals, start making money on your own with that free stuff on the website. And again, our membership links are down there. Twitter links are down there. Hope you learned a bunch tonight with this stuff. Hope you use this knowledge to make a bunch tomorrow. And hopefully I'll see you sometime soon trading with us at the opening bell as a student in the morning trade. In the meantime, be well, be nice to those out there, and you better be here next time. Adios, amigos. Bye for now.